Hello, welcome to the webinar series on CannaRestructuring, how to leverage restructuring laws to improve cash flow. My name is Jim Ickes, and I am an attorney at the law firm Zuber Lawler. Zuber Lawler is one of the most selective law firms in the United States, representing clients throughout the world from 8 offices across the country. Zuber Lawler focuses on emerging industries and technologies, including cannabis, psychedelics, clean tech, cryptocurrency, artificial intelligence, and many more. I'm honored to have several representatives here with me today from Amos Advisory Solutions, Beach Fleischman, Broadbent Advisors, and Zuber Lawler. To kick off our discussion before we dive into it, here's a quick disclaimer. The opinions expressed are of the individuals and not any companies associated with this presentation. We don't encourage the use of illegal drugs. Consult your healthcare provider and attorney regarding the use of cannabis. Nothing in this presentation creates an attorney or fiduciary relationship. Please seek the advice of your own professionals. So it's a good time to have this discussion today on restructuring related to the cannabis industry. Obviously, I'm sure many of you out there, and thank you for attending, are aware that we're heading towards rescheduling to Schedule 3, which should change many things in the cannabis industry, particularly on the financial side. Many companies should have access to the federal courts, including bankruptcy. However, restructuring may be an option before going to those drastic measures. It's been a hard slog for many cannabis businesses over the last several years because of the current tax structure. I'm referring to 280E when some of our professionals can explain that, where businesses can't take the same deductions that all the other businesses in the country are able to take. So as a consequence, many cannabis businesses are struggling. I've looked at some data from Whitney Economics that indicate that about 3.8 billion in deficiencies are out there in the cannabis industry, and that's possibly going to go up to 4.2 billion in 2024. So there's a lot of problem from an economic standpoint with these businesses. My understanding is there's about 40,000 license holders in the cannabis industry, and only about 8,000 are profitable. So there's a lot of restructuring that probably needs to be done out there so that these businesses and these pioneers in this industry can survive. So I'm going to let our panelists introduce themselves. If we could just go around, let's start with you, Joe.
Thank you, Jim. Good morning, everybody. My name is Josephine Giordano. I'm a CPA with Beach Fleischman. I am a senior director in the business valuation and financial forensics section. Beach Fleischman is the largest locally owned CPA firm here in the state of Arizona. We have clients all over the country, Canada, Mexico, and we provide the traditional tax and assurance services as well as consulting, turnaround, and valuation and forensic work. Thank you for having me today.
Thank you, Jim. Hi, good morning, everyone, or afternoon or evening, whenever you're viewing. This is Janet Jackham. I'm a business lawyer and co-chair of the Cannabis Practice Group at Zuber Lawler. I've been in the cannabis industry approximately 10 to 12 years, and it's been a fun ride. I'm really looking forward to contributing to the panel this morning. Thank you.
And good morning. My name is Terry Mendez. I'm the Chief Executive Restructuring Officer at Amos Advisory Solutions. It's a boutique business consulting firm serving the cannabis industry, specifically in the areas of transformation and restructuring. I help my clients turn around various situations, most recently as Chief Executive Officer of an MSO, helping them overcome a no cash situation, generating over $150 million in value. Was a Wharton graduate, 14 years in Big Four, and executive at Fortune 500 and Global 100 companies before that. Glad to be here. Thanks for inviting me.
I'm Gary Broadbent. I most recently served as Chief Restructuring Officer of AppHarvest, which was a publicly traded company that operated giant greenhouses that grew fruits and vegetables. So not directly in the cannabis space, but certainly a related industry. I also serve as an independent board member to Revel Greens and provide other restructuring services to clients.
Fantastic. Thank you, Gary. Well, let's jump right into it. And also before we jump into it, I want to let folks out there know that please submit us questions through the chat, and I will work them in as we work through this discussion today. And also there'll be a poll that will pop at some point in time, so please look for that. So let's start out with some definitions to kind of set the stage here. Can somebody please define restructuring, turnaround, and turnaround management? And let's go to you, Terry, if you wouldn't mind jumping on that one.
Sure, no problem. Think of restructuring as a component of transformation. Transformation is a process of setting up a change management function that allows your company to get ahead of the curve. Restructuring, though, is kind of triggered when there's a failure. So there's a bad connotation around that, but it could be either a change in your management team, a fundamental process that's not working, think payroll not getting paid, vendors not getting paid, receivables not getting collected, sales follow-ups not happening, or something larger like an unexpected shift in the business. You had a failed crop, you don't have the cash flow to overcome that. You have new competition that you didn't have. You went from a limited license state to a unlimited license state. Whatever the issue might be, that causes you to fundamentally have to change how you go to market, how do you go to business. Your infrastructure entirely needs to shift. And so think again about restructuring as a component of transformation. And it's really a function of either you having a change management function that didn't work, a failure of a process or a system, or a shift in the environment that requires you to catch up for you to get ahead. So it could be a positive thing. It doesn't always have to be unfavorable. It could be favorable. Hey, we have this opportunity, but we don't have the people and the team necessary to jump on that opportunity. How do I get there, even in that situation?
Josephine, you want to add to that?
Yeah, that was very well said. I mean, the way I look at it, and I'm a restructuring professional and a turnaround professional as well. And the way I look at it is, and I don't look at it in a negative connotation, because, we deal a lot even in bankruptcy matters, where reorganization and restructuring is hopefully the outcome of a bankruptcy. So if people look at it as a positive note, I would say restructuring is the developing of the financial structure or the revamping of that financial structure, hopefully to either renegotiate debt and lower the burdens of the debt structure of the company, but basically to establish the starting point for a turnaround. And when I think turnaround, I think more operational. So when you think restructure, you think financial structure change. When you think turnaround, you're thinking of the operational deficiencies that need to get addressed as part of this restructuring progress. Like, for instance, heavy employee turnover, would need to get addressed. Inventory management would need to get addressed. So that's how I would look at the definitions based on restructure and turnaround.
Fantastic. I don't look at it as a negative thing, particularly regarding cannabis, because these businesses have essentially been operating with two hands tied behind their back from a tax standpoint. And it's really amazing that many of them have been able to get on and stay, just survive, given the tax structure. So the fact that they may be behind in their accounts payable, they're probably because they're not getting their accounts receivable paid on the other end. So hopefully some of that's going to change with the upcoming change in the law. Some folks aren't so optimistic about that, but I'm hoping for these businesses that occur and they can get some help from folks like you. So Gary, you've been involved in some restructuring on the ground. What are some signs that a business is heading into a restructuring position?
Yeah, typically, Jim, you really look at the accounts payable for the company and whether they're able to meet their debt obligations or their AP obligations when they come due. When companies are facing cash crunches, oftentimes you see that accounts payable grow. You see kind of the company looking for better terms from creditors or longer pay periods. Yeah, a lot of the principals who lead these companies will know what that feels like. That you can see the cash crunch. You can feel the cash crunch permeating the company. So it's important to get ahead of it, and the sooner you act, the better prepared you are to avert crisis.
All right, Janet, how have recent changes in federal and state laws impacted restructuring options for cannabis businesses?
Wow, that's a very loaded question. Thank you so much. Because we've got both federal and state implications pending. I think the largest implication affecting any kind of restructuring is going to be the rescheduling of cannabis from a Schedule I drug to a Schedule III drug, which very definitely appears on the horizon. I understand, however, that there are a number of DEA proponents who do not want to see this happening. And there are a number of us cannabis proponents who don't want rescheduling, but want descheduling. All of that is thrown into the mix of what could happen at both the state and federal levels if there is a rescheduling or descheduling. Generally speaking, rescheduling, let's focus on that because that's on the table right now. Rescheduling can be seen to have tremendous positive effects upon the status of many cannabis companies. In short, the non-applicability of 280E, IRS code 280E, would mean that cannabis companies would be put in parity with other companies, including law firms, accounting firms, consulting firms, and other retailers, for example. It could also mean that there would be a huge market opened up across the country if interstate commerce is permitted. In fact, you'll see some of the states already conducting surveys and initiating legislation in their own legislators to have, like, not unlike the gaming compacts with respect to Native American tribes and states, but it would be interstate commerce compacts relative to lab testing, products coming in from other states, and other such important developments. I think you're going to see new distribution centers opened up, which will encourage more competition. More competition is usually good, but it may more competition may weed out the smaller, ineffective, unproductive companies, and then restructuring numbers go up. Obviously, this is a really big answer, and there are many, many more implications we can talk about, or you can call one of us and we're all capable of talking about it. But
fantastic. Thank you, Janet. So Gary, I guess from a legal perspective, because I know you're a lawyer as well, in addition to serving as restructuring officer, what are the first steps that a cannabis business should take when considering restructuring?
They should engage restructuring professionals. I mean, they're no surprise, but most people who found companies, operate companies, haven't been in a turnaround type situation, in a restructuring situation. And so having a steady hand with you that can guide you through the process, that can ensure the optimum outcome, is going to be extremely beneficial.
Josephine, I'm going to go to you on this one. What are the most critical financial metrics that cannabis companies should monitor to avoid cash flow problems?
There's probably a ton of them, but I mean, first off, definitely, I want to just readdress what Janet said about the descheduling and the tax impact. So that tax impact, just to remember, that's not retroactive, that's prospective. So, again, if you're sitting on a tax liability, the restructuring concept, needs to be applied there, and, to see what we could do with that prior debt going forward. But I would say, certainly the basics. I mean, you want to look at your operating margins, your gross profit margins, look at what you're doing there. In terms of the cash flow issues, you want to, what I'd like to recommend to my clients, and what we're trying to strategize now is, because we're on a good path with our clients, our tax clients, to look at a cash flow forecast even before the descheduling concept came up, to really get a grasp on your cash management and how it looks going forward. But what I like to do now, looking at the tax implications, we're prospectively and projecting out what it would look like in that scenario. What is it going to look like without that tax impact? How can we now project out and pay down debt, renegotiate debt as part of the restructuring, and run those forecasts simultaneously to see what the impact is there. And we shouldn't limit the metrics to just financial. We should also look at operational metrics. Again, I think, as I mentioned before, you want to look at the employee turnover. You want to look at any loss of customers. Why is this happening? You want to look at the revenues that you're generating and what portion of the market share you have, and can you get more of it in the geographical area that you're currently in. Not to say that at some point you might be projecting, interstate commerce and how that could affect your business. So there are a lot of components to the financial metrics that we try to apply, to our clients in the cannabis industry.
Fantastic.
If I may add a comment, Jim, I think one of the most important issues in any company, any cannabis company's activities today, whether you're an MSO or a regional operator or an individual participant in the cannabis industry, you want to take a look at all of your contracts. I mean, you're never going to get a rent reduction unless you ask for it. So think about how you might approach a landlord, for example, and underscore the impact of negative consequences upon the business, and ask for a renegotiation of the rent, or deferred rent, or some, maybe even a promissory note if you can do that for rent that hasn't been paid. I mean, so you take a real detailed look at all of your at least major contracts and figure out if you can save some cash that way.
Well, I think you have to look at it like we mentioned before. I mean, these companies in this industry don't have the benefit of bankruptcy protection, right? But conceptually, the issues and the problems are the same. As they head into that insolvency zone, we have to treat this like a company that might be heading toward bankruptcy. So all the things you're saying, Janet, is absolutely correct. That's exactly what we do in a bankruptcy too. We're looking at leases, we're renegotiating leases, we're looking at debt and trying to renegotiate that. So there's nothing that stops these companies, even though they can't obtain that bankruptcy protection, nothing stops them from trying to restructure their financial structure of their entity.
Yeah, and if I could add.
Yeah, go ahead, Terry.
No problem. Let's step it up a little bit. When you're looking at your company, it really depends on the type of company you're talking about. If you own dispensaries, processors, if you're a cultivator. But the first thing I think you need to understand to see, even if you're in trouble to begin with, is what is your cash gap? How much money are you spending every day? What's your run rate? What's the dollar that you spend in inventory, and how long until you get that dollar back plus a return? That cash gap has been expanding. As you've seen vertical integration happening, you're getting fewer and fewer, I will say you're getting less and less of a dispensary being allocated to wholesalers. And therefore, there's a lot of pressure on wholesalers to make payment to their vendors timely, but wait 60, 70, 80, 90 days for getting the payment back. And as that cash gap grows, the amount of money you have to fund your interest payments, to fund management fees, to fund required capital commitments like rent goes down. And so you're going to see very quickly, if you understand how to measure cash gap, very quickly how if you're going to be in trouble and what your inflection point is. So, hey, I can finance up to 60 days of a cash gap. But once I get to the 61st day, I now have a problem. I don't know where that money's coming from. And I start playing what I call the credit card game. I'm going to, borrow from Peter to pay Paul. That's a problem. It's a very early indicator that you have a potential situation for restructuring from a financial perspective.
One other thing too, Terry, that I guess while you're riffing on that, what are some of the common financial mistakes that you're seeing cannabis companies make that lead them to a restructuring situation?
There's many. I mean, we all
Yeah.
have stories. I've been in this industry a while now at the executive level, and there's story upon story upon story. I think they come down to a handful of kind of categories. One is we're trusting the people that are on our team to tell us the accurate information. And quite frankly, you need to trust and validate everything. Competency in this industry depends, right? So you might be a wonderful trimmer that's now a department head, that's now a VP of something, and now you're doing cultivation. You grew up, but you don't have the competencies that you need to say, hey, there's a problem here, and be able to articulate that problem in the way that your audience is going to understand or that executive is going to understand. And so being able to say, does that information make sense? Does that information jive with other information I see, and really validate that information? And when you're making changes, when you're going through restructuring, you need to have that level 10 understanding. The CEO, me as the CEO, right, only understands so much of how a dispensary operates, but the dispensary manager knows everything about how that dispensary operates. And so while you've got to bring it down to that dispensary manager's level, you also have to know what's going on in that business at that, what I call the level 10 area, so that you can make the right changes at the right time. So the first is trust and validate. Second is make sure you understand the business, what you're changing, because what you're changing it's an ecosystem. A business is like it's just an ecosystem. You change one thing and you change 100 things, right? And often what we do in this industry is we over-rotate on throwing bodies and people at problems. If I hire more people and I put more bodies, maybe they can get this done. That never works. Not seen it work across a dozen or so situations. And I'll say the third one is a couple more, but really the third one is about chasing growth without having infrastructure in place. We can grow. The pipes start leaking. If you think about plumbing, right? Your pipes start leaking. You don't smell the leaky pipes for a while. People work overtime. People are working 18 hours a day. You're not getting the information timely. You're getting excuses. All of those are leaky pipes because we don't like to invest in this industry in infrastructure. Love the toys, right? We'll have every process. We'll have any automation toy out there. But when I say infrastructure, whether it's human resources, marketing, inside sales, accounting, and finance, all of those functions generally are underinvested and overworked. And when I say underinvested, I don't mean you don't have enough of them. You didn't afford the right group of people, so you have what you have. I'll give you a quick example. I was asked to work on a SPAC IPO of a company, a cannabis company, back when those were popular, and they were running on Sage. Nothing wrong with Sage as an accounting system, right? But their average age of their accounting team was like 24, 25, 2 or 3 years out of school. They don't teach Sage in school. And it's a very advanced platform. It's kind of up there with SAP and Oracle and NetSuite, right? And so you gave someone a jet airliner, say, please run the jet airliner, when they should have been driving a Ford, right? And you run into these problems. So here's some examples of like, what's the root cause of the problem? Then the question is, how do I fix the problem? So the last thing I'll say is, you need to hire or bring in talent, or make sure your talent has an ability to know what a change management structure should look like. What are we changing? Why are we changing? Who needs to be involved? Do they have the adequate amount of time to do it? Do you have level 10 level of outcome? Can they develop the strategy? Do they have the authority within the business to actually sell the strategy up and down the organization, right? And then can they implement it? And when they implement it, do they have the authority to then reevaluate it, honestly say what worked and what didn't work? This worked great, without the issue of, well, if it didn't work, it's my fault, and therefore I might lose my job, and therefore I can't tell you it didn't work. That's nonsense. And that's why sometimes you'll hire an advisor who says, I don't care if I lose my job or not. My job here is to think straight and talk straight, and that's what I'm going to do for your clients.
Right. Thank you, Terry, for that. So you mentioned developing a strategy and implementing the strategy. So the company is having financial problems. There's a strategy created around that. So the word gets out, employees know about it, and they know that they're heading into a restructuring scenario. And I know you've been involved in these personally, Gary and Terry and everybody on the panel here. But Gary, could you talk a little bit about the impact of restructuring on employees and how you manage that?
Of course, Jim. It's stressful for everybody. Usually when companies are facing cash crunches, it's the accountants that see it first. And people around the accountants, the rest of the finance accounting team, that usually in these kinds of companies, it's a small universe and word travels fast. And people see when the cash balance is low, people see when the accounts payable are high, when the accounts receivable are not coming in, they're not being received.
No bonuses.
Right. No bonuses, right. People start worrying about being able to meet payroll, being able to meet tax obligations. And from that core, word spreads very quickly. So finance and accounting sees it first. Legal, if the company's big enough to have a legal team, sees it second. And when it comes to HR feels it the most. And I think the best strategy with dealing with employees is to be frank with them and be honest with them. You can't hide from the financial position of the company. You just have to address it head on and say, we acknowledge there's problems. We're developing a plan. Here are options. We'll tell you more when we have a deal. And I think that candor will do a lot to nip the rumor mill and speculation in the bud.
Thank you. That's good advice for sure. Go ahead.
This is so critical because the rumorville causes weird employee things. Like Gary was saying, you get employees that stop hiring replacement bud tenders because they feel we're in a financial crunch. And you're saying, why are we running this way? I had a dispensary that only had 4 employees when it was doing $2 million in business a month. You know what I mean? And so you get some employees start doing some really strange things. And so one of the things we did is we created a video series, and I would host the video series, and we would talk to the employees about what's going on, what the strategy was, what their role in the strategy was, and why they were so important, and who they should talk to about questions like that. Because they come up, they won't tell you, hey, I'm concerned about this, and therefore I took this action. They'll just take the action. And then you find out later that maybe that wasn't the best thing for us to do. So managing that fallout is very important.
Absolutely. So you can keep your best people too.
Can I interject?
Yeah, absolutely.
If you wouldn't mind. I hear us all talking about things that can be done, including trying to keep the employees comfortable. Hiring competent counsel and accounting assistants and so forth. But where does that money come from? I mean, all of what we're talking about costs. So let's, if we can, talk a few minutes about how does the company continue to operate, but yet takes on additional costs and expenses. Like, who gets paid first? Do the founders agree not to be paid, notwithstanding they're working in the system? Or, I mean, you're not going to get lawyers or accountants or consultants free. So you've got to come up with a way to pay them. What do these companies do? Do they stop paying accounts payable? Do they take longer time? Where does the money come from?
Yeah, a couple of thoughts, Janet. Wonderful question. Because that's kind of the reason sometimes people choose not to hire me, right? In terms of my company. The challenge is understanding that and getting comfortable with that. One of the ways the money comes is that there's going to be a cost reduction. The question becomes, where does that cost reduction come from? And you don't know the answer to that until you bring somebody in to do the evaluation to say, this is where you've over-rotated, right? I've seen cannabis companies that have every member of their family working with them. I have companies that have fleets of cars that we had to sell off. We had companies that had functions and non-performing dispensaries that they were spending money keeping afloat versus shutting them down. And so part of the evaluation of whether or not I take on a client, for example, is there really a restructuring where I can get paid, right, a reasonable amount in this process? And anybody that's spending time in this industry knows that and should be able to do that evaluation, upfront to say, look, this is the initial plan. This is the initial plan. It will refine it. We didn't spend 100 hours figuring out this plan, but if you agree and I agree, let's move forward with the game plan and see how that works. And some of the companies out there, including Amos, would take on the role at a month-to-month basis, right? If it's not working at any point, pull the plug, right? What you really don't want to have happen is that you outsource everything to somebody, pick your favorite low-cost center of excellence, you lose control of it, and now that person is non-removable, right? Hey, I don't like the direction my company's going in. I hear your advice. I love your advice, but I can't do it. I'm not ready for it. You should be able to say stop. But if you outsourced everything, all of a sudden you don't know how the infrastructure of your company works anymore. And now that person has created themselves a permanent job. And so it's very important that whoever you pick from a restructuring perspective actually brings you along for the ride, so that you're not left with a business that when that person goes away, you don't know how to run.
Great point.
I think that's so important what you just said, Terry. I mean, that's exactly right. So it's then transitioning what you've done, what we've done as consultants to the management team, so they can pick up and go from there, and that they don't need us for the long haul. I mean, what I noticed when I started in this industry was probably back in 2016, and it was a little bit of a wild west when it came to other professionals getting involved in the industry. I mean, there were many clients that would come to me and they didn't have good legal counsel. They certainly didn't have accounting people helping them out. So it was a little bit of chaos. So even to this day, they may have to spend extra costs. Where they come from, I guess it's a priority thing. I mean, I still go into companies today and see that they don't have accounting records. They haven't updated their accounting records in a year. I mean, so I didn't think that was still happening at this point in time, but it is. So, I find that the ones that bring on the accounting firms to perhaps even handle their outsourced accounting, if they're large enough, that then transitions with their tax team, it really eliminates a burden for them where they can concentrate on other things because they're really not accountants, so to speak. So let them transition that out. They're not lawyers. They need to have the right team in place to handle their issues.
Great points. Anybody else want to add to that question about how a company pays for this restructuring process? And anybody want to add to that? Think we're good? All right. So Jim, there's a moment now in cannabis with the Schedule 3 on the horizon, likely, and access to the federal courts and ability to file bankruptcy if bankruptcy protection to give these companies some breathing room. So typically, I know in my years of experience in representing clients, the threat of bankruptcy is usually a pretty good cudgel to get some negotiation going. But with cannabis, there's the threat of bankruptcy, but also there are sunnier days ahead, ostensibly with rescheduling and access to more customers and possibly interstate commerce. So you can go to them go to creditors with the argument that, hey, look, we're having a short-term cash crunch here because of all these issues. I'm going to be able to bankrupt out of it. I don't want to do that because we like having good credit, and we don't like upsetting our vendors and folks that we deal with. So I guess on the ground, restructuring, the nuts and bolts of restructuring, how can cannabis companies renegotiate debts and leases effectively during a restructuring process?
I think that we need to look at the ability to get into bankruptcy post Schedule 3 as a sword and a shield.
Yeah.
It's a sword against say, a large product retailer who isn't paying the invoice on time. And we've seen that recently, past couple of years especially,
right,
where large retailers will owe their cultivators or extractors, for example, $2-3 $750,000 in account invoices. Well, of course, the cultivator is going to have major financial issues if the account is outstanding that much. So if we were to take a bankruptcy or a receivership, which we can talk about in a minute, then the fact of taking that step permits the debtors counsel, for example, to go after the creditor. What do you call a creditor? Well, it'd be the customer who hasn't paid, and using the power of the court to back up the claim and make the customer pay. On the other hand, bankruptcy and receiverships can be used as a shield. And what does that mean? Well, that means that the debtor, the cannabis company, for example, cannot pay its debts. And unless a court approves an enforcement action of the debt, that there's no litigation over it, which is a great savings to any company who doesn't have to defend itself in another court proceeding. It is a bankruptcy and receiverships are, as I say, a sword and a shield. And while they too are very expensive to implement, they do offer these special attributes and benefits to the insolvent or in trouble cannabis company.
You know, I mentioned briefly at the beginning kind of the extent of the deficiencies in the cannabis industry, 3.8 billion. To add on to that, over half of that is actually associated with verticals, so larger companies. So it's not all the little guy that's really struggling. It's the big companies too. Big companies that will be able to utilize the services of a chief restructuring officer. So I imagine we're going to see the deployment of many chief restructuring officers out there in this industry for a lot of these larger companies. So
Gary and Terry.
Yeah, Terry and Gary, you guys have served on that role. So can you basically tell me about that job? What does that take? What is the role of a restructuring officer within a company? And just take us through that a little bit.
Gary, you go first.
All right, Terry, thank you. So the primary job of a chief restructuring officer is to focus on liquidity of the company and make sure that we preserve cash. And by preserving cash, you maintain optionality. The second responsibility is to develop the plan to turn around and restructure the business. That could be a recapitalization. We could refinance the debt. We could seek an equity partner. We could look to existing equity, have a call for capital. We could work with our lenders, our creditors to get better terms. There's a lot of different options a CRO has in front of him, and it allows one point person to basically run that process, and it frees up the existing management team, the existing executive leadership, to actually do their jobs and to focus on the day-to-day operations of the business, because there's just so much bandwidth that the executive team has, and having some dedicated attention to optimizing the liquidity position of the company and achieving the best outcome possible is going to be very beneficial. Terry?
Sure. And Gary, you're 100% right. Listen, when you hire a chief restructuring officer, make sure it's someone, in my opinion, that's outside of the business, coming in, that has industry expertise, but also has competence across multiple disciplines, front of the house and back of the house. The reason I say that is because you want to start this process quickly. You want it to be fast, have decision-making capability, but most importantly, you want to make sure the person doesn't have any preconceived notions about what is possible and what is not possible, what the owners think are acceptable and not acceptable. Hey, businesses that you thought you had, a hemp business on the side, or this, I give you a bunch of examples, but whatever you think is off the table, you have that self-limiting belief, and then it limits the creativity and transparency that person can have up and down the company. There's a possibility inside of here that you might have to fire people. We hope not, but you might have to fire people. And that's very hard for some people to get around and do, or divest of a dispensary, or divest of a cultivation, or shut one down. We just recently did that, shut down a large cultivation in Arizona. These are hard things to do. And if you're emotionally attached to it, it becomes a very difficult thing to do. But you also want to have the detachment. You want to be able to work with that person again. So people like Gary and myself, we don't need to be the friends of your people. Actually, it's better off if I'm not your friend. I'm just going to tell you the truth, right? And you're going to say yes or no. But let me tell you what happens in receivership. It is a nightmare. It is a shield. I 100% agree with Janet, but it's also a massive nightmare, because the court is going to appoint whoever they feel is competent and whoever both sides agree with. So you have the ability to say yes or no to that person within reason, and pick someone. But that person, the first thing they're going to do is send you a letter saying, this is the court order. And by the way, your board is no longer relevant. And every person that's in your company now reports to any person that the receiver appoints, right? And they're able to hire and fire and divest people with no negotiation. So better off doing that before a receiver is appointed and being able to show a court that you are actively pursuing something that's similar to the outcome that the litigant is telling you. But reality is that is not a fun process. They don't care about a single individual. They're not even going to ask you what your opinion is. And they're going to go forward with, how do I liquidate what I can liquidate to pay off whatever debt the court said I have to pay off, in the best interest of everyone, senior secured debtors and unsecured debtors. It's, again, not fun. Better having that team in place up front, or if you're ever in that situation, give any of us a call and we can help you out.
It's a great point. Bringing in kind of a unaffiliated, separate person to come in and handle the dirty business of cleaning up the debt, why everybody else can be friendly and maintain those good relationships with folks you've done business with, presumably over a number of years. So one more for you too, Gary. How do you maintain good relationships with creditors through a restructuring process?
I think the way you do that, Jim, is to be honest and to be very transparent about the need to preserve cash for the company and to ensure that the cash flow pipeline remains stable for the company. Creditors get it. I mean, they've often invested in many different types of companies. They've seen this, this type of situation before, and they understand when there's a need to work out. But they need to know that if there's a bridge, if there's a workout, that it's a bridge to a better place, and that the problems the company is facing today are not going to be systemic problems that we have to keep addressing again and again and again. So one of the ways to do that is to have a third-party financial advisor, have a third-party legal advisor who can give, or a chief restructuring officer who can give their candid assessment of the situation. Oftentimes, creditors are tired of hearing of the internal team. They've seen the projections before, the projections haven't been hit, and that credibility is gone. What they often look to is a company that's taking things seriously by bringing on kind of restructuring expertise to provide them with a clear picture of what the current situation is, what the path forward looks like, and where the company's going.
I'm hearing a lot of honesty and transparency in dealing with these situations. That's one thing about numbers and money. It's hard to hide, and it kind of forces you to be honest.
It's like anything else. You can't hide from your problems. The sooner you address it and tackle it head on, the better.
And you bring up a point of trust, right? You said, hey, the board or the investors or the debt holders are losing trust in the management team, and they're looking for you to take it seriously. That's exactly the situation in my last, client. And reality was when the owners or the management team, which had ownership interest, became defensive about the feedback, it worsened the situation. So any advice I could give to the folks listening here would be, hear it, don't respond to it, think about it, come back with a response, because your knee-jerk response, like, that's impossible, that's not happening, I don't understand this, you don't know the industry, all of that makes you look worse. If you hired me, for example, to come in and do an analysis, and then you accuse me of not knowing the industry, either you made a wrong hiring decision, right? Or you're trying to hide something. Either way, you don't look good. Better off staying silent and then having that conversation with me and with the board separately that says, hey, I heard this, but did you consider A, B, and C? Versus the defensive-ness, because that kills that relationship and that confidence almost immediately.
Josephine, I want to hear from you. So we want to avoid restructuring, say. What are some ways that companies can improve cash flow and avoid the restructuring and all the issues that go along with that?
Right. I think, first of all, they have to, are they cash flow forecasting? I mean, that's usually the problem to start. So most of the time, they don't even really know at what point their cash flow crunch becomes an issue, right? So it's really important to identify that, and cash flow forecasting is crucial to this industry. So that needs to be done. Identify where the issues are, what parts of the month, what are the payments, what's their access to working capital. Trying to identify potential working capital alternatives to alleviate those crunch periods. Certainly the basics that work for other industries work for cannabis. I mean, evaluate your spending. What are you spending on? Are you overspending for things that you don't need to spend on? Some of those basic things really make a difference. And when you plug those into a forecast, you can see that. So it's really important to have that model put together and kind of work it, as you're going along. Well, if I do this and I cut back on spending, how is that going to affect different things? How does my inventory management look? A lot of times inventory management is an issue. what's the turnover of the product that, we're selling, what's not selling, what is selling, those basic concepts that are relevant in any industry apply here as well. Those impacts will obviously impact your cash flows. So that's important. What are the salaries we're paying? What is management? What are they pulling from the business? Let's take a look at that closer. So a lot of time, and again, like one of the things I think we had discussed this as a group before is that the tax liabilities that they're sitting on, you're almost behind the 8 ball now if you've got this tax liability sitting there. You can't negotiate. Well, you could try certainly, but you can't effectively negotiate a tax liability if you don't know what your available cash is to pay that, right? So we talk about consistency, transparency. Those are super important in dealing then with the IRS if you're sitting with a huge tax liability. I've run into companies that are sitting on quite a bit of tax liability, saying that we're going to renegotiate with the IRS. Oh, we're going to pay X amount a month. Well, how do you know you can afford X amount a month? We need to look at that. We need to look at that cash flow modeling and see what's happening. So that's really important. And some of the other operational things that we talk about that affect then cash flow, eventually is the internal control environment that entity has in place. Do they have, sorry about that. Do they have do they have the availability to get what they need? Sorry, I don't know why my phone's ringing. There we go. So, those are, increasing revenues, obviously, without doing something where you're getting into that zone of problems by overexpanding, which I think Terry touched on earlier. Sometimes overexpansion just creates more problems when you don't have your infrastructure in place. So putting that infrastructure, which includes a lot of things, the financial infrastructure, the operational infrastructure, inventory management, cash management, key components of this industry. Those are things that have to get quite a bit of attention applied to them. So taking a look at that and then trying to figure out how we can benefit from the tax impact that the descheduling will have on the industry. I mean, as it is now, some states, not all states, but some states allow the deductions on a state level. So that helps on the state side, obviously, but not all states have that. So those states are even in more of a crunch position than other states, let's say like Arizona, that does not have those, does not apply the 280E issues within the state, taxes. So there's quite a bit that can get looked at, but the inventory and cash management, to me, and the internal control environment of the company are key components of better, cash flow forecasting into the future.
I think those are all great points, and definitely before you go to your creditors, vendors, landlords about restructuring, if that's where you have to head, they're definitely going to want to know, what have you done? What have you done to address your cash problems? And I think deploying your suggestions makes a heck of a lot of sense. Go ahead, Terry.
No, it's all good. Josephine, you mentioned inventory, and that brings up things you capitalize on the balance sheet, and that brings up accounting terminology like accrual and cash-based record keeping. When you move, I call accrual basis the accrual basis for accountants, and I'm a CPA in 3 states, but I still don't like it. The reason I don't like it is from a financial planning perspective, and I've done that for about half my career. You hide things on the balance sheet. When you're looking at your inventory balance and you're capitalizing labor, but you had a failed production run, or you had a failed prop, that labor gets capitalized into your inventory. You don't see the cost come through. And it allows people to think you're doing better than what you actually are, but that inventory costs you money. right? And so now you're forecasting and planning on a run rate spend on your P&L that's not real. And so I recommend many times for people to keep their books on a cash basis and then quarterly, step up to the accrual basis if you have accounting requirements or tax requirements to keep your books on a accrual basis, because the idea that that won't be figured out by a smart investor is not true. A smart investor is going to look at your inventory, they'll look at your prepaids and every other asset to see what you're hiding on the balance sheet that really belongs in the P&L. They're going to restate that anyway, and then they're going to come back with a lower offer for your company. So you're not doing yourself any favors by hiding stuff on the balance sheet, even if it's really GAAP compliant. It can be GAAP compliant, but investors still won't pay for it. And so better off showing the real run rates of the company and keeping it simple for your people.
Great suggestions and advice. So we are coming close on ending our webinar here. So anybody who wants to get in a Q&A, please submit us a question so we can address it. But until I receive that, let's prognosticate a little bit. So where are we heading in the cannabis industry as it relates to restructuring? What trends are we seeing? Where are we going to be 6 months from now? If anybody wants to jump on that.
Jump first. I think accountants and lawyers are going to have a lot of work to do because there's going to be so many uncertainties. Remember that we have one federal government and we have 50 state governments. And of the 50, what do we have? Maybe 40-ish states have a cannabis program, one or two programs. And those are going to likely have a difficult interaction with what the feds decide to do. And so if you're an operator or a cultivator and you've spent a lot of money on your infrastructure, the building, your plants, your retail showcases, etc., you're going to wonder, well, gee, do I have to spend in a different way now to comply with a rescheduling? For example, will I become like, if I'm a retailer of cannabis, will I become like a pharmacy where I have to have a doctor prescribing cannabis? Because that's basically what the current scheme at the federal level requires of Schedule III drugs. And those kind of major questions are going to rock the industry. Frankly, I think that the illegal industry is going to increase quadruply. I mean, I think that it's going to be so much easier for people to be able to get drugs on the street rather than the retailers and the other operators with them in getting products out through lab testing and other regulations. I think it's just going to get to be very complicated.
Understand that. So we do have anybody want to jump? We did have a question come in. What is the timing of the recent approved rescheduling? If anybody knows.
There's no particular timing. They're going through the federal process, and so most likely it'll happen, weeks and I'll say weeks before a presidential election. But to add what Janet was talking about, think about 88,000 pharmacies now can carry cannabis. Think about NAFTA and the implications of NAFTA bringing cannabis from Mexico and bringing cannabis from Canada legally through that protocol, and think about interstate commerce in the legal states becoming more of a thing. Those are tremendous shifts in the industry that will cause more transformations and, as a subsegment, restructurings. And because there's a limited group of us all that really know what we're doing in this industry and have spent time the last 5, 10, 15 years in the industry, the price for those services are going to go up, no different than how it happened for the public companies when they had to implement Sarbanes-Oxley back in 2002, right? And so all of a sudden, competent people will be hard. And what'll happen is that the incompetent people, I'll talk about some of the big accounting firms out there that don't have cannabis practices, and they'll bring people from their cannabis practice in Canada down into the United States and hope and pray, right? And they're gonna, but they'll sell services because they'll be the only people available. So my recommendation to everyone that has an issue is get aligned fast, right? Because right now it's kind of like on the horizon, but you know it's coming. And when you have your team in place, you're able to execute versus, spending 3 to 6 months to find the right persons to help you through this process.
Be proactive is what I'm hearing. Be
Yeah.
honest and transparent, and get your documents together and get your books organized. Because I'm seeing sunny days ahead. So I'm an optimist, though. Ideally, I'm seeing Medicaid and Medicare paying for cannabis, hopefully, here.
Yes.
Road.
And there could be tons of sunny days. I mean, the reason I even got into this industry was because it was kind of like the software industry in the 90s, right? It's up and coming, and the new owners will be owners that are everyday household players, and and the new opportunities will be broader. And one day you'll see CEOs and owners of cannabis companies being division leaders of big public companies, and why not be in the right place at the right time?
Absolutely. I think those are some good words to end on. I think we're at our time. I want to thank our panel for participating. This takes a lot of time to put together over actually several months, and I thank my team at Zuber Lawler for all the background work that goes into putting on these webinars. I want to thank our attendees who are out there watching. So thank you for your time and attention. Please reach out to us if anybody has any questions. All these folks here on the panel are accessible to you, and you should have access to their email, and I think they'd love to hear from you. If there's any questions that you think of, following this webinar, please reach out and we'll make sure we get you a good answer to your question. So signing off. Thank you very much.
Thank you.